Good morning and welcome to the Killik & Co market update. So today is the 29th of March and it was supposed to be the day of Brexit. However, as it stands, we have no idea when we'll be leaving the EU or even if we'll be leaving at all. This week, MPs were asked to vote on whether they would support 8 different Brexit options with a view to working out whether any of these options would be able to make it through Parliament. However, MPs voted down all 8 of these options. And here's a chart showing how these MPs voted. The pink lines on this chart are the most important, so they give you an idea of the extent to which each of these options was defeated. And as you can see at the top of the chart, the customs union came the closest to making it through. Far down the list we have no deal, which was defeated by 240 votes. So as things stand, it does appear that Parliament at the moment does have a preference for a softer Brexit. So what's happening next? Well, today MPs will be asked to vote on just one part of Theresa May's deal. So the original deal had 2 parts. One was the withdrawal agreement and one was the so-called political declaration, which offered a framework for the future relationship between the EU and the UK. So that second part's been put aside and MPs are just being asked to vote on the first part. That vote is taking place at 2:30 p.m. today. Now, if MPs vote in favour of that, then we will be leaving the EU on the 22nd of May. However, if they vote against it, very difficult to know what's going to happen. And if that happens, then the uncertainty is set to continue. Last year, interest rates in the US were rising and it was expected that interest rates around the world would start to follow suit. And that expectation of rates going up did put some downward pressure on bond prices and we saw yields rising over the course of last year. However, this year so far, we've seen things going back the other way. And I think there are 2 possible reasons for this. One is that interest rate expectations have come down. For example, the Federal Reserve previously expected to raise rates 4 times this year. It's now said it won't be raising rates at all. And also the European Central Bank has confirmed it will not be raising interest rates at all in 2019. Another possible reason is that expectations of global growth have declined, probably not helped by the trade war between the US and China, and that's probably led some investors to think they prefer to be in bonds rather than equities. So over the course of this year so far, we have seen investors moving into bonds, pushing up bond prices and bringing down yields. This chart here from the Financial Times is quite interesting. It shows the global value of bonds that have a negative yield at the moment. As you can see, that value has gone up quite significantly over 2019 so far, and it does make the point that investors at the moment are willing to buy into bonds really no matter what the price is. So yields have come down quite significantly and it's really not good news for income investors. And finally this week, McDonald's has announced it will be buying an artificial intelligence business. And for us, this is a great example of how artificial intelligence will be used across a multitude of different industries over the coming years. So McDonald's has bought this artificial intelligence business with a view to using it to change the displays on its drive-through menus. So here's a quote from the press release that McDonald's put out this week. They said that McDonald's will utilize this decision technology to provide an even more personalized customer experience by varying the outdoor digital drive-through menu displays to show food based on the time of day, the weather, the current restaurant traffic and trending menu items. So for example, if it's a hot day, they can show more ice cream. If it's a really busy day, they can show items that are quicker for them to make. The technology can also recognize consumers' registration numbers, so when they drive through, it can offer them their usual order. So lots of different applications for this. And for us, it's an example of how AI will start to be used over a multitude of different industries over the coming years. Now, moving on to the week ahead, it is the end of the tax year, so please do make sure you've subscribed to your ISA, you've subscribed to your pension, and you've also used your capital gains allowance for this year. And in terms of companies reporting, fairly quiet next week, but we will be looking ahead to results from Walgreens Boots Alliance and eShore. That's it from us. Have a great weekend, and we'll see you next Friday.